Welcome back to Crypto Labs News. This might be one of the biggest moments we've seen in the crypto space. Huge announcements came out of the Federal Reserve's first ever Payments Innovation Conference this morning, and it's changing everything we thought we knew about the relationship between crypto and traditional finance. The message from the Fed is clear: this is a new era. The DeFi industry isn't being pushed away anymore. It's being invited in. And if you've been following XRP, you already know what this means. Governor Christopher Waller opened the conference by saying something no one expected to hear from a Federal Reserve official. He said this isn't about resisting disruption anymore. It's about embracing it. He explained that the Federal Reserve plans to be an active player in the technology revolution that's transforming payments, and that includes distributed ledgers, tokenized assets, and stablecoins. These are the same innovations that Ripple and XRP have been leading for years. Waller emphasized that crypto is no longer on the sidelines. It's now part of the financial fabric itself. Just a few years ago, that kind of statement from the Fed would have been unthinkable. Waller described how new technologies are reshaping everything from interbank transfers to liquidity systems. He acknowledged that private companies have been driving most of the innovation, and that the Fed's role should be to support and enable that innovation while protecting stability and trust. He said, "We want to see a vibrant conversation between traditional payment incumbents and the new entrants from the DeFi world." Imagine that, the Federal Reserve openly inviting DeFi projects, crypto innovators, and fintech companies to work with them on U.S. payment infrastructure. Then came the biggest bombshell. The Federal Reserve is proposing a new kind of master account called the Skinny Master Account. This would allow legally eligible institutions, including fintechs and crypto firms, to get direct access to the Fed's payment rails. In simple terms, this means crypto companies would no longer need to rely on partner banks to access the U.S. payment system. They could plug directly into the Fed's rails themselves. Think about what that means for companies like Ripple, Custodia Bank, Kraken, Circle, and Anchorage. These firms have been fighting for years to get access to those Fed systems. Custodia even went to court over it. Now, the door might finally be opening. The new system would grant limited access, not full master privileges like borrowing from the Fed, but it would give these innovators exactly what they've been asking for: a direct, legitimate connection to the Federal Reserve's payment infrastructure. That's how crypto becomes part of the global financial backbone. Analyst Paul Barron summed it up perfectly. The Fed just changed the game for crypto payments. This new framework could allow stablecoin issuers to tap into the Fed's rails directly. That means lower costs, faster transactions, and more legitimacy for digital currencies. For Ripple, Circle, and Anchorage, this could be the turning point they've been waiting for. After years of regulatory friction, the Federal Reserve is now acknowledging that digital assets and distributed ledger technology are essential to the evolution of payments. During the conference, the lineup was stacked with names that should sound familiar: Chainlink, BlackRock, Paxos, Circle, Coinbase, Fireblocks, Armor. These are the companies shaping the future of finance, and they're now sitting at the same table as the Federal Reserve. The discussion was all about bridging traditional finance with DeFi, stablecoins, and tokenization, the exact kind of system XRP was designed to power. And speaking of XRP, the market has been reacting fast. XRP shot back up to $2.50 and is holding strong. Analysts say this could be the start of the next major leg up. The M2 money supply continues to rise through November, showing strong liquidity growth before a potential dip into December. And historically, that kind of movement has aligned with major crypto rallies. As the global liquidity curve bends upward again, XRP could be one of the biggest beneficiaries. Governor Waller's remarks perfectly captured what's happening. Crypto isn't on the fringe anymore. It's woven directly into the structure of modern finance. The Fed itself is acknowledging that distributed ledgers and tokenized assets are part of the payment system's future. That's validation for XRP holders who have believed in this technology since day one. Meanwhile, traditional banks are waking up too. Executives from BNY Mellon explained how tokenized deposits and stablecoins will coexist in this new system. A tokenized deposit is essentially digital cash that stays within the bank's own ecosystem, improving efficiency and liquidity management. A stablecoin, on the other hand, exists outside the bank's walls, moving freely across blockchains. Both have different roles, but together they solve one of the biggest challenges in global finance: trapped liquidity and settlement delays. BNY Mellon also confirmed it's serving as the custodian for the reserves backing Ripple's RLUSD stablecoin, which shows just how deep Ripple's integration into the banking system already goes. Even the International Monetary Fund weighed in during the conference. When asked about President Trump's goal to make the U.S. the crypto capital of the world, the IMF's managing director said America is leading in innovation right now, but it needs to maintain trust, agility, and cooperation. Trust, agility, and unity. Those are the exact principles driving blockchain adoption worldwide. This entire event feels like a turning point. The Federal Reserve hosting a conference that openly praises DeFi and welcomes crypto companies isn't something anyone thought we'd see 5 years ago. It's proof that the financial revolution is already here. Ripple, XRP, tokenization, and stablecoins. They're not the future anymore. They're the infrastructure being built right now. The charts agree too. XRP is forming one of the cleanest structures we've seen in years. Analysts are pointing to a symmetrical triangle breakout, a 3-month 10 EMA retest, and a potential run toward $8, $13, and even $27 based on Fibonacci extensions. Of course, none of this is financial advice, but when technicals, fundamentals, and policy all line up like this, it's hard not to be bullish. Altcoin season is coming. Many thought it was canceled, but it's not. It's just delayed. The moment XRP flips its 2021 all-time high into support, it's game over for the bears. The trend line that's held for 6 years is about to break, and once it does, it's going to melt faces. Everything we've waited for, regulatory clarity, institutional adoption, integration with global payment systems, it's all here. This isn't speculation anymore. The Federal Reserve, the IMF, and the biggest banks in the world are now talking about tokenization, stablecoins, and distributed ledgers as part of the financial system. We're not outside the system anymore. We are the system. So, hold strong, XRP holders. We're standing at the edge of history. If this conference proves anything, it's that the world's financial infrastructure is moving onto blockchain, and Ripple is sitting right in the center of it. Appreciate you tuning in today. Smash that like button, hit subscribe, and drop your thoughts down below. Are we finally at the finish line? Because it sure feels like it. We'll see you all at the tippy top. And remember, they tried to shake us out, but we were born ready. We just getting started. Yeah, we just getting started now. Going way up, way up, way up, dummy rich. Whole family dummy rich. Prices blowing minds like a glitch. They said it couldn't happen, but we're living it right now. We were the prophecy, and the prophecy came true. See you at the top, glitches. The revolution's here.